There is a big difference between the way institutional investors look at investing and retail investors. I mean, we know the Tesla example is a good one to illustrate the differences. That kind of tug of war between the traditional backwards-looking world, which is based on benchmarks, and certainly the top positions in benchmarks are where they are because of past performance. Ark is focused on the future, especially on the future that involves transformation. And so benchmarks, I think, have been an impediment, and setting up research organizations in the way they've been set up is also an impediment to some of the new ideas. Analysts are very siloed and specialized by industry or sub-industry or sub-sub-industry. The problem with that is these new innovation platforms around which Ark has centered its research and investing are cross-sector in their ramifications. So it is the platforms that we have centered our analyst responsibilities on, and they are generalists, and all of them are comfortable with technology. You do not find that in institutions. And I truly believe that research departments in institutions will have to reorganize in order to invest successfully or optimally, shall I say, in innovation going forward.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. And yes, this is your mum's kitchen, but you wouldn't know what it looks like because you never visit her. Moving right along. In today's video, I'm going to be reacting to some comments from Ark Invest Cathie Wood explaining why Ark Invest and many retail investors have been able to outsmart the biggest and so-called best on Wall Street, the big institutional investors, Wall Street analysts, and many hedge funds. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
I think disclosing our trades at the end of every day has become very important to many people who own our strategies, participate in Ark strategies, but also for others who don't. And, you know, it's developed a life of its own out there. There are YouTube videos and blogs and so forth around it.
Whoa, things just got real meta real fast. Cathie Wood of Ark Invest talking about YouTubers disseminating the ideas of Cathie Wood and Ark Invest inside a YouTube video talking about, you guessed it, Cathie Wood and Ark Invest. What are the odds? Now, I do have a point with this. I've just had a quick look at my YouTube statistics and realized that over the past 12 or so months, I've made 48 videos disseminating the ideas, the research of Ark Invest, trying to share my thoughts and opinions, etc., giving people a little bit of a hint about what's around the corner in terms of disruptive innovation, doing my best really to scream from the rooftops that things are going to change enormously, and hopefully helping intelligent investors make better investment decisions. I've just tallied up the total views on my Ark Invest videos and the number exceeds 2 million. This really illustrates Cathie's point. By Ark's approach of being transparent and open with their research, sharing their thoughts, their opinion, their analysis, even their valuation models on GitHub, it's allowed their ideas to disseminate to an audience of investors far and wide. In fact, I know many of you watching, probably most of you watching this video, would consider yourself a Cathie Wood fanboy or fangirl. This is unusual. When was the last time any investor, any fund manager, anybody rose to the level where people would literally buy merchandise with their face on a t-shirt, mug or phone case? Sounds like a good idea. BRB. Well, somebody had to do it. I know Ark Invest are far too humble to create this style of merchandise, but I know you guys and girls want these, so I've done it. Queen Cathie merchandise now available. Check out the link in the description. There's shirts, we've got hoodies, long sleeves, phone cases, even mugs. I can't believe this is an actual thing. I mean, can you imagine an investor, like, this is just ridiculous. But what's even more ridiculous than the fact that this merch exists is that some of you guys and girls are actually going to buy it because you have that much adoration for Queen Cathie. So if you'd like to pick up your Queen Cathie merch, check out the link in the description. And if you do pick up one of these merch designs, make sure you flex them out in public, guys. The whole point, spur on some interesting conversations. One day, somebody, somewhere, is going to spot you wearing your Queen Cathie shirt, recognize her. Yo bro, holy shit, that's Cathie Wood. You know Ark Invest, let's talk. Next minute, best friends for life. Or at least that's kind of the idea. So don't be shy.
And what I think this is doing is bringing the retail investor, particularly the young retail investor, into the investment realm in a healthy way. They want to understand what is going on. They love transparency. And so we tried to provide as much of that as possible. The other thing I think is going on, and I do think this is going on, we have noticed, and our intermediaries have noticed that there's been elevated options activity in our funds, both on the strong days and on the weak days. Well, that probably is the case. And here I'm going to give you a sense of why I think that's the case. There is a big difference between the way institutional investors look at investing and retail investors. I mean, we know that the Tesla example is a good one to illustrate the differences. And I know there was a lot of frustration, and it seems to have been pent up over many years about Tesla and our research on it. Lots of fear, uncertainty, and doubt with which we had to contend.
It feels like a lifetime ago, but it was less than 12 months ago that there was absolutely nothing but relentless FUD, fear, uncertainty, and doubt being spread about Tesla everywhere you cared to look. Most of the talking heads on the mainstream finance networks had no idea about the company, no idea what they were talking about, yet still had a negative perception. 90% of the guests appearing on these mainstream finance channels were either short Tesla stock and or short brain cells. Wait, that's probably superfluous because it's the same thing. Okay, cool. Well, yeah, they were short something. There was so-called industry experts saying that Tesla had no technological advantage. There are all sorts of financial geniuses suggesting that Tesla was going to run out of money, they'd be bankrupt soon. There were a few adult virgins living in their mum's basement somehow getting to appear on networks like CNBS as well. In fact, I spent the first 6 to 9 months of this channel almost exclusively fighting the FUD and Tesla because I just realized there's a huge opportunity here. So many people are going to be gullible enough, they'll hear the mainstream finance media, everyone saying the same thing, they're going to stay away from this company, miss this enormous opportunity. Thankfully, now that Tesla's headed to the moon and all the people that previously sounded crazy who were fighting the FUD now have been proven correct, a few more people are going, whoa, these people are a little bit more credible than the morons who thought Tesla was going bankrupt. Maybe we should listen a little less to these idiots who don't have much credibility now and a little bit more to the likes of Cathie Wood & Co. at Ark Invest who actually called it. Thankfully, this transition is happening, but man, let me know in the comments below if you guys can remember the FUD tsunami that was attempting to drown Tesla throughout 2014, 15, 16, 17, 18, and most of 2019.
We thought it was a good thing, the debate. A lot of institutions are not set up actually to analyze a stock like Tesla. And I'm not saying all institutions, but I'm saying most institutions. And the reason for that is after the tech and telecom bust 20 years ago, almost to the day, March 10th, it started 21 years ago. And then on top of that, the 08-09 meltdown in the equity markets and the bond markets, there developed a lot of risk aversion, and volatility became a bad word. We have a volatile strategy, and we use that volatility to our benefit, trading around positions. Volatility is not a bad word in a bull market. Volatility, you've seen what happens in a down market. What has happened is institutions tend to be very benchmark sensitive. And I'm going to use Tesla as an example here. Tesla, as you know, many of you know, did not enter the benchmarks until last fall. when it was over $500 billion in market cap. So there was a lot of there were a lot of investment returns to have up to that 500 billion, and we were happy to be there.
Me too, Cathie.
And we're happy that institutions are joining us now, but they're joining us primarily because Tesla entered the indexes. I'm not sure they really are trusting this. And the reason for that is their auto analysts tend to follow the traditional auto industry. And the traditional auto industry is very mature. And as I mentioned before, we think it's in decline. We are focused on exponential growth opportunities. We believe a subsegment of the auto industry is going to see exponential growth for the first time in 100 years. And so that's our sole focus. Institutions have hired analysts to focus on an industry that is mature, and now there's a transformative really revolution taking place that will alter the auto world completely. There was a lot of skepticism. The auto industry itself didn't expect electric vehicles to amount to much of anything I think they thought it wouldn't take until the mid-20s. Well, it's here. And we began to invest aggressively in this space on that assumption as we saw battery pack system costs decline as rapidly as they have been declining.
Some great points here from Cathie Wood. Now, I'm going to make some assumptions here. Deal with it. The vast majority of Wall Street analysts living in their little automotive box were incapable of understanding Tesla, the company. Why would that be? There's a few reasons. First of all, they didn't have the intellectual framework to understand what they were looking at. I asked a question. How many automotive analysts do you think have a relatively intimate understanding of deep learning, of neural networks, of exponentials, of cost curves, of engineering, of manufacturing, of software? I could keep going. The answer to my question is approximately zero. Yes, exceptions exist, but approximately zero. This is why everybody missed Tesla. When you're given a company to cover, hey, auto analyst who does Ford and General Motors, you're now covering Tesla as well. If you don't have a broad and comprehensive understanding of all the relevant technologies, all the relevant information relating to a company like Tesla, and you're a Wall Street stock analyst, you don't have the intellectual framework to actually understand what you're looking at. Therefore, you're going to make pretty poor decisions in judging this company as an investment opportunity. You're more likely to reason by analogy and make colossal errors in judgment as a result. For example, well, they make things with wheels. They must be an automotive manufacturer. Forget about the software, the batteries, who cares? They're a car company. They think they're going to grow at 50% per year. When was the last time a car company ever did that? Over-the-air updates? What are those? Like no one else does that. Like what? I'm just going to ignore that. Full self-driving revenue? No, I'm going to ignore that. Oh my gosh, they don't pay for marketing and advertising. What's wrong with these people? They'll never grow. Oh my gosh, they're terrible, terrible company. What? They make the world's safest vehicles? Who cares about that? Yeah. And that, ladies and gentlemen, is approximately what went down within most of these Wall Street firms who attempted to analyze Tesla, the company, and therefore make comments on Tesla stock over the last half decade or so. I'm not a hater here. I'm not trying to disparage these folks, but I'm just calling a spade a spade. The majority of analysts who were on Tesla stock absolutely missed it. They just did not see what was there. They were blinded by their own biases. They tried to squeeze Tesla into this tiny little box. It's an automotive manufacturer and nothing more. And now they're kind of embarrassed by the fact that they had a sell rating on Tesla stock, which has since 10x'd over the last year or so.
That kind of tug of war between the traditional backwards looking world, which is based on benchmarks, and certainly the top positions in benchmarks are where they are because of past performance. Ark is focused on the future, especially on the future that involves transformation. And so benchmarks, I think, have been an impediment, and setting up research organizations in the way they've been set up is also an impediment to some of the new ideas. The other difference between what Ark is doing, what a lot of retail investors focus on is time horizon. I know that institutional investors are much more short-term, many, not all, and they're very focused again on the benchmark. So this idea of being graded every year based on how well an analyst or portfolio manager did relative to a benchmark is quite constraining. The luxury we have, and retail investors have, is retail investors really don't have career risk. We might have a little bit more of that, of course, given what we do, but we have a 5-year time horizon. That is a luxury. That's a luxury. And the difference between linear growth and exponential growth in the early years, when electric vehicles are at 500,000 a couple of years in sales globally, last year 2.2 million, in those early years, because the bases are so low, there doesn't look on a graph to be that much difference between linear growth and exponential growth trends. You give that a few more years, and the difference is quite surprising. I mentioned that 82% growth rate. We really believe that's going to happen, especially now that China is pushing hard. I don't think traditional auto analysts still believe that could happen.
Some really important points from Cathie Wood here. First and foremost, the fact that most analysts are backwards looking, don't really understand the implications of technology. This is a really critically important point. If you're an investor who's looking to actually make returns in the future, you must understand the changes that are about to take place and completely disrupt every aspect of our lives. This isn't hyperbole, I'm not exaggerating. This is a serious statement. The convergence of artificial intelligence, automation, robotics, changes everything. Now, I hate to be so direct, but this is important, guys. Come in close, okay? The majority of people watching this video today, right? I don't know what you do for a profession, but most of you will be completely useless in 10 years' time because a robot, a machine, artificial intelligence, something along those lines will be able to do what you currently do as a job way better than you. So, you really do need to understand this. It's not just in terms of investments, lifestyle, everything about our daily lives will be completely transformed over the next few decades. And it's not just there. We also have the genomics revolution, which is systematically, one by one, going to cure disease after disease after disease after disease, ultimately helping human beings live longer, healthier, happier lives in great cognitive and physical health well into our hundreds and ultimately well beyond that. Yes, I know this sounds crazy to some of you guys, but I'm telling you now, just like electric vehicles are the future, we're going to be curing every disease that exists, period. Not all tomorrow, might take a while for some of them, I understand that. With the convergence of deep learning, neural networks, the tsunami of genomic information, now that we can economically sequence human genomes, etc. You need to understand all of this stuff. You have a comprehensive understanding of all of these disruptive, innovative platforms, or you as an investor are prone to make really dumb decisions in the future and be about as embarrassed as those Wall Street analysts who thought Tesla was just a car company.
The third issue that institutions are grappling with, that we are not, and that retail investors are not, is that the analysts are very siloed and specialized by industry or sub-industry or sub-sub-industry. That is just how the market evolved over the last few years. The problem with that is these new innovation platforms around which Ark has centered its research and investing are cross-sector in their ramifications. So it is the platforms that we have centered our analyst responsibilities on, and they are generalists, and all of them are comfortable with technology. Very comfortable. Healthcare-oriented analysts, very comfortable. Industrial, you do not find that in institutions. And I truly believe that research departments in institutions will have to reorganize in order to invest successfully or optimally, shall I say, in innovation going forward. Our analyst responsibilities, as I said, broken out by platform and technology. And the reason that's becoming more important is because the platforms are converging. So it's getting even more complicated. Autonomous taxi networks involve 3 of our platforms. And you've heard me say this before, but some of you may not. Autonomous vehicles are robots. That's one of our platforms, robotics. They will be electric, so energy storage, battery pack systems, another one of the platforms evolving out there. And they will be powered by artificial intelligence, another one of our platforms. It is very difficult in a traditional institution, which is very siloed, to have analysts collaborate in that way. They haven't been set up to collaborate. Our analysts are all about collaborating. So the world is changing. We set up Ark to accommodate or acclimate to this new world. And as you know, we are sharing our research on social media so that we can engage with and become a part of the communities that are innovating. So we are receiving insights, I believe, because we're willing to share our research. We're receiving insights about our research from those in the field. Are we making incorrect assumptions? That would be good to know early in an exponential growth trajectory, because if you make an incorrect assumption in the early stages of investing an exponential growth trend, and you carry that mistake out, you can make big mistakes. So just wanted to share a little bit why the disconnect between traditional institutions and perhaps what we're doing.
More great points here from Queen Cathie, really highlighting some of the major shortfalls, impediments, disadvantages and obstacles that traditional analyst firms face when trying to understand and analyze disruptive, innovative companies and technologies. Without collaboration, cross-pollination, open sourcing of ideas, transparency in research, and generalists who understand a broad range of technologies and their implications, these guys and girls have absolutely no chance. And that brings us to the final point of this video. You guys, who happen to be smart enough retail investors that you're currently on YouTube on whatever day you're watching this, probably the weekend, educating yourself about what's around the corner, about these disruptive, innovative platforms, and also trying to learn from some of the colossal mistakes and errors of judgments made by some of the so-called best of the best Wall Street analysts who've missed opportunities like Tesla and currently are blind to the enormous disruptions happening before their very eyes. This may be an audacious claim, but honestly, I genuinely believe that even the dumbest of you are probably going to be better investors than most of the Wall Street analysts today who are still so blinded and boxed in they cannot see the inevitable change happening before their very eyes. Before I wrap this video up, let me know in the comments below, do you personally feel that you're doing enough to educate yourself about these huge converging, disruptive, innovative platforms? If not, why not? By the way guys, don't forget your Queen Cathie merch, link in description. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.